Thank you, Amanda. Pleasure to be here and try and give you a bit of an education on what the banks look for if you want to buy an investment property and build wealth through that vehicle. But why create an extra income stream through property? Well, obviously, as Malcolm's touched on, it can help you retire sooner. Then you've got some choice around how hard you're working or not working and how you're spending your valuable time. But there's been a problem. So recently, you might have noticed during COVID that property prices did this. So we had a huge amount of government stimulus and interest rates at record lows, which meant that we saw in a lot of areas 20% growth in property year on year. So about 40% over 2 years. And what that meant is that a lot of mortgages did the same. But if you have a look at this lighter blue line, this is the wage index. So you can see it really hasn't moved. So our wages haven't kept up with the pace at which property and the cost of living has increased and our personal mortgages, which Malcolm touched on. And so we get a lot of customers or a lot of clients come and talk to us about investing in property, but don't know where to start, don't know how to take that first step. And of course, you can go directly to your bank, and they'd encourage you to do that. But the problem is, when it comes to buying property, particularly if you've got a mortgage on your own personal home, the bank is going to try and bundle all that lending together. They're going to want to take it all, and that can present problems down the track when you want to sell or offload one of those properties. They then have the ability to take any profit and use it to pay down loans. And you may not want them to do that. You may want the freedom to be able to choose, okay, if I've made a profit on my investment property, how am I going to direct those funds into another one or into super, or at least have that choice? So with a mortgage broker, we have the ability to structure it so that you potentially use different lenders for different properties and thereby have more freedom when you do come to sell or upgrade as to how that money is dispersed. As Amanda mentioned, we've been fortunate enough to help over 500 Australians with home loan approvals. And so the process we follow, we take a structured process to aligning the right lender when you're looking to buy property and create that extra income stream. We call it the 5 L's of lending. So we start with your level, identifying how much you can borrow. Now this first step is really simple. There's only 2 things to focus on: income and equity when it comes to investment properties. How can I increase my income? And when we're talking about income, we're not just talking about how much you bring home, but how much income or cash is available at the end of every month that can go towards investments, and how can you increase your equity? And the way to increase equity, as Malcolm touched on, is by reducing your personal debt. So we then look at the type of loans. Do you look at fixed or variable? Which lender? Lodge in your application, and we review your interest rate on an ongoing basis. So that equity piece, I'm going to just show you how it looks from a bank's perspective, from a lender. If we can assume there's a couple here that I've got an existing home and they've seen a property, maybe a unit or in a regional area for $400,000 that they want to invest in. They've got an existing personal mortgage here. Now this is what we want to, if you can take away one thing from tonight, it's to actually build wealth, you want to extinguish this as quickly as you can. So their property is worth $450,000. The banks will allow you to gain equity in that property up to a percent of 80% of the value. So if the property is valued at $450,000, 80% is $360,000. The existing loan is $200,000. So we've actually got $160,000 available. Just pause on loan 2 for a minute. I'm going to take you over to here. The property we've seen is $400,000. To obtain debt against that property and keep it separate, we can borrow 80%. So you can see there's a gap there of $80,000 plus transaction costs. So we can secure this deposit loan, you might want to call it, against your principal place or your existing home that goes towards funding your investment property. Now, the reason this is highlighted orange is because it is tax deductible if it's being used for investment purposes. It's all about where is this money going? Is it going towards an investment or is it going towards the jet ski or something like that? Because if it is going towards something that's a personal nature, it's not tax deductible. Does that make sense? So we go about it, setting it up in that sort of a structure so that when you do come to sell or upgrade this property, it's only this loan that needs to be cleared, despite this is an investment loan here. So just to reiterate, your income helps show that you can afford the loan, and your level of equity, how low we can get this loan and how high this figure goes, determines how many properties you can potentially buy. And then this is just the calculation that the bank would use to ascertain if you have enough equity. They'll look at the value of both properties, whilst we're still using two different lenders to establish how much equity is available. We'd look at the value of both properties, in this case being $850, and the total lending required, our personal loan and our total, this should say loan 2 and 3, our total loan needed there. So 415,600 because we've allowed for stamp duty. So you can see we're under that magic 80% mark in this instance. So if your value of your home is 450,000 and your home loan's 400,000, our advice would be focus on getting that down. Get your equity debt up first and your personal debt down. So we looked at the equity. We now look at the income or the money that's left over every month and how the banks ascertain how much you can borrow. And in this example, you can see we've got a family with both individuals working, a car loan, some credit cards, their living expenses, got children, they've got an existing personal mortgage of 200,000. If we go ahead and make some changes there, you can just see the impact that it has on their borrowing power. So again, car loans, if we can get rid of that, it's going to improve our borrowing power enormously, which allows us to go and accumulate more assets, create another income stream. The credit cards, the banks work off the limits. They don't look at how much you owe, they look at what your limit is, because to them, that's how much you've got available to spend. And then your living expenses, again, you can address that. So I just wanted to tell you a story. Recently had a couple we've been working with for about 7 years. They started in Brisbane, bought a residential house in the Gap, if some people know where that is. And of course, property in Brisbane has done very well over the last 7 years. Both working, their incomes were high and increasing. So they bought another 2 properties in Slacks. Well, they bought one in Slacks Creek, another one in Deception Bay, 2 years after the Gap. So that was about 5 years ago. They then accumulated another property down in Tasmania. They moved to Melbourne and then bought another one in Melbourne. Then they're having children, so they've hit the pause button because the income is no longer increasing like it was. And the equity has grown, but it's stayed at a pretty constant level. So I share you that story because when your income is rising and you've got plenty of surplus cash, that's when you can take that step forward and accumulate more properties. But when the income and the cash flow left over at the end of every month is limited, that's probably the time to hit pause and focus on getting that personal mortgage down. So on our website, we've got you can book an appointment that's free over Zoom, so we can meet virtually. Under resources, there's some really helpful calculators as well. Show you your borrowing power, what sort of repayments would be, how much stamp duty would be to buy property. Okay.